Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we're going over a company that I haven't made a video about in about a month or so. We just had a big update, especially for dividend growth investors, and it's Vici, ticker symbol VICI. Vici Properties just raised its dividend by about 8.3%. This company did previously have a dividend of about 36 cents a quarter, and now it is raised up to 39 cents a quarter. So that's almost a 10% raise, but not just out of any company, but also out of a real estate investment trust. I just wanted to give a brief recap, a brief overview why I think that this is a great company, why they continue to have great returns over the last year or so, and why I think this is likely going to continue over the next several years, that this is not just a one-off event, that this 5-year chart isn't finally coming to a close. I think that this is going to continue to go up and likely to see lots of other future dividend raises, including the one that we just saw today. If you haven't checked me out before, if you haven't seen me, my name is Jordan. I'm a Millennial Investor, and this is my track record since joining YouTube, since starting with my $1,500 investment of April of 2020, a whole 2.5 years ago, and this is where we were as of September 1st. And speaking of September 1st, it shows my performance year over year compared against the indexes, including year to date, 3-month, 1-month, and this is my most recent portfolio balance as of today, which is actually the record. Right now, we currently have about $43,000 in the portfolio, and this is an all-time record for me. Now, we're going to continue to update you guys, good and bad, and also continue to update this portfolio that is down below in the description, which is seen right here. There's also other things like your auto savings accounts, credit card referrals, and of course, that $10 referral bonus for getting signed up with One Finance, which is what we're going to be using to look at Vici stock here in just a moment. But $10 is what you can do to get signed up there. You'd help support the channel and you'd help support me. So thank you guys so much for tuning in. I appreciate you for watching, and let's go ahead and get started. Let's go over to the research tab here in M1 Finance, and let's type in VICI, Vici stock, and let's look at the last 5 years. The company is up about 80% or so, and it's consecutively paid out dividends quarter after quarter after quarter. Now let's go over to the little NASDAQ website here and look at its history paying out dividends. It originally started in 2018 at 16 cents, raised up to 26 cents, up to 28 cents, raised again to 29 cents, again to 33 cents, and then 2021 and 2022's payment up to 36 cents, and then now, as of the most recent announcement, it is now going up to 39 cents, or $1.56 annualized, which is an 8.3% increase. Now, the reason why this company continues to do better and better every single year is because they have a compelling business model. And I want to give you an example of that. They just came out with a recent piece of news, which says Vici Properties to acquire Rocky Gap Casino Resort and lease to Century Casinos Incorporated. Now you look at the little bullet points here. Acquiring asset at an attractive 7.6% capitalization rate. Expands master lease with Century Casinos Incorporated, and the acquisition is expected to be immediately accretive at closing. Now, this is August 25th, so this is just about 3 weeks or so ago. Now, those 3 bullet points right there, especially the first and the third one, acquiring asset at an attractive 7.6% cap rate. This is something that is extremely important if you want to be a REIT investor, which is Real Estate Investment Trust. If you know real estate, you should know what a capitalization, short for cap rate is. If you do not know what that is, we're going to go over that in this video. And then more importantly, this is immediately accretive at closing, which means the day that they sign this agreement, shareholders are instantly, from the first day, receiving profits and putting that back in their own pocket, which leads, of course, to dividend increases like the one we just saw. Now, I went ahead and Googled here just so you can see what is a real estate cap rate, okay? Which is short, once again, for capitalization rate. And it's really simple. It says the capitalization rate, also known as cap rate, is used in the world of commercial real estate to indicate the rate of return that is expected to be generated on real estate investment property. This return is computed based on the net income in which the property is expected to generate and is calculated by dividing the net operating income by the property's asset value and is expressed as a percentage. It is used to estimate the investor's potential return on their investment in the real estate market. While the cap rate can be useful for quickly comparing the relative value of similar real estate investments in the market, it should not be used as a sole indicator as an investment strength because it does not take into account leverage, the time value of money, and future cash flows from the property's improvements, among other factors. That's a quick definition of what it is. As you can probably tell, long story short, it's basically the way of almost determining, it's similar to almost like the profit margin of a standard business. That's pretty much what like a cap rate is almost for real estate. So basically, if you have a cap rate of 5%, that means if you have a $100,000 home and you're getting a 5% cap rate, then your operating income is $5,000, 5% of 100,000, right? So obviously you want that number as high as possible. Now, according to Statistica, now I'm not sure how accurate this is. When you try to Google and you try to find out information, there's not really a right or wrong answer because cap rates vary so much by region, by type of property, and so many other factors like that. But according to Statistica, so once again, take this with a grain of salt. As of the first quarter, the average cap rate was 6.14% for properties that closed in the first quarter of this year in 2022. Now, hopping back over here to this report, its cap rate was 7.6%. And just so you know, looking at some of its other deals, that's pretty standard. Generally, from what I've seen, they generally range around 6 to 10%. So they have such a compelling opportunity where they can get higher cap rates than traditional single-family homes or small businesses. Now, another company that's a real estate investment trust that have done very well is Realty Income. And if you don't know, they own many different properties that you know and shop at every single day, whether it be, it doesn't matter if it's a Sam's Club or a Walgreens or an AMC theater or whatever. This company continues to get revenue from its properties, and it is very boring everyday stores that you see every day. Now, Vici is the sense that it's very unique and that its properties are extremely differentiated from its competitors. Just look at some of these real estate properties. This is not something that you just see every day, right? These are the type of properties that are millions and millions and oftentimes even billions and billions of dollars. And the thing is, since there's so much less competitors, it takes such a high barrier to entry of capital to get started with these type of properties, like Caesar's Palace and the Venetian. It does not take a small amount of money to get started. It takes billions of dollars to even compete in this space. Look at these properties. It is ridiculous. And so this is where Vici has an advantage. They have lots of capital, they basically own the Vegas Strip, and they can negotiate deals like this with 7.6% cap rates. And more importantly, as you've noticed, when you see this little revenue chart going up over time, it's not just from buying new properties and being smart with their capital, it's also from raising rents. A lot of their rents are tied to CPI, and so as inflation goes up, their rents increase with it, and they do nothing more. And that's why I've talked about before these lean business models. If you talk about all of these REITs, like let's go back to like a Realty Income, for example. If we look at their expenses and we put in their R&D spending, it's zero. All they have pretty much is CapEx and general and administrative. If you look at their research and development, if you look at their sales and marketing, it's zero. These are very lean business models that are built for profitability. So Vici is a company that I still like. It's one that I'm glad that I added to the dividend growth portfolio. It's one that will likely be staying in here for a long, long time. And it's currently having, there it is, 6% weighting in the portfolio, which is once again shared down below in the description. Sign up with M1 Finance today if you like this brokerage, if you found it helpful, if you found it interesting, and if you're interested in investing in Vici, M1 Finance is a platform where you can invest in it. But thank you guys so much for watching. I appreciate you watching all the way to the end, and congratulations to the Vici shareholders that received this dividend raise. But without further ado, guys, my name is Jordan. I'm Millennial Investor, and I'll catch you guys next time.